Hi, welcome to Financial Education Foundation. My name is Warren Shute. I'm with you today on my own, and I wanted to cover alternative investing. So getting involved with things like gold or currency investing, cryptocurrency possibly, and actually spurred me or has initiated this by Andy, who follows the social media site and is on the Money Planner newsletter list. So if you're not on that, sign up for that. There's some great information on that. And I post out there any questions you've got for me, feed them back and I'll respond to them. This happens every now and again. So if you have any questions, let me know. And Andy said, cover alternative investing. I bought some gold Cougarang coins, cover alternative investing for me. So I'm going to touch on that. So first thing is investment. For an investment really is something that produces your returns. If you look at a company, a share in a company, that company makes a profit, hopefully, and that profit then can be extrapolated out to the future, so you can estimate or predict with a level of certainty of long term what that likely return will be. Okay, so if we're looking at investment, it has a predictable nature to it. Same with a rental property. If you look at a rental property, it produces a rental yield and income. Therefore, that has a predictable flow of cash flows into the future. We can have some kind of predictability about it. So an investment earns a profit, earns money. If we look at gold, for example, or a precious metal, it is purely a commodity. The price of the precious metal fluctuates relative to people wanting to buy it, how in favor or out of favor it is. If it's in favor, the price appreciates because more people buy it. If it's out of favor, the price falls because people want to offload it or sell it. But it's not dictated by revenue streams. So it's a commodity, it's not an investment. And that would go for a lot of things like artwork, wine, that sort of thing. Because it doesn't produce anything, it can't create more value in itself. Therefore, it's a commodity. Or people tend to call them alternative investments. But an investment really is something that's a producing investment. At our level, an investment typically is an equity or a share or a fund, a collection of shares, or a buy-to-let property or a property portfolio, because that's what's going to make the profit. The other thing about gold, if you hold the gold coins or gold bullion, is the capital gains tax position of it. So if you hold that personally, you're going to pay capital gains tax on that. So, and it can be quite expensive as well with storage and things. If you only own a few coins, it's okay. But if you need storage, it can be expensive. And that would be the same with wine. It can work out to be quite expensive as well. So keeping your charges down and keeping your taxation down as well is going to allow you to keep more of the return. So capital gains tax on gold bullion or gold coins, whereas if we own shares in a portfolio in an ISA wrapper or a pension wrapper, obviously the charges are lower and therefore it's also capital gains tax free. But apart from those two things, even if you say, well, actually, I'd like to own a bit of gold because I think it's quite exciting. I'd like to own a bit of gold because it might hedge against some kind of inflation period. And I can hold, I'm only going to hold a few of those in gold coins. I keep them home so my charges and things are going to be quite low. What are the returns being like? Okay, so if we compare the returns of gold against a stock market basket, say the FTSE All Share, which is the London Stock Exchange All Share, so it's pretty much all of the shares in the FTSE market, we've got a return of about 3.5% for gold per year versus about 9.5% for a market return. So if you look at the difference there, 3.5% for gold, which we think is going to do a great return, versus 9.5% for a market return. So it's almost 3 times as much for being in the market. So a FTSE All Share tracker, nearly 3 times as much, probably cheaper to hold, and certainly most likely going to wrap it up as a tax-free investment. So it kind of weights everything in the index fund category. It's also very, very liquid. If you look at the risk behind them, some people say gold's very, very low risk. The downside risk, how much the investments have fallen in value, is actually pretty much the same. They've both fallen about 40%. It's late 30s. So about 40% of each one. So you can tell that the risk associated each is probably similar, but the returns on the FTSE All Share is much, much higher, by about 3 times as much. So getting wealthy, folks, is boring. I promise you, getting wealthy is boring. You need to get a strategy that works, work the strategy, and then just get off and enjoy life. Just go to do the things you enjoy doing. Allow the system to work itself. Pound cost averaging, putting money away, keeping your charges down, keeping your taxation down, and just managing your day-to-day finances and just enjoy life. So my recommendation is avoid alternative investments, avoid precious metal investing, all the other things that look exciting, look sexy, because they've got great headlines. Stick with an index tracker, a diversified global portfolio, maximum pension, maximum venture ISA, and keep things nice and simple. Hope that's been helped today. I'm sorry if it wasn't necessarily what you wanted to hear, because it's not racing exciting, but it is what works. My name's Warren Shute. This is Financial Education for the Nation. Please share this on social media and sign up for the Money Planner newsletter, where I share lots of tips and advice going forward each week. Take care.